Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for May 15, 2025. We had a mixed day on Wall Street with mixed economic news. PPI really came in under. The rest of the news was kind of mixed. Jobless claims came in pretty much as expected. So I think the take home was there's some contraction in manufacturing, but jobs are holding up. And even though the PPI came in light, which should have been a good thing, the prior months was revised up quite a bit, so that perhaps neutralized it. So mixed economic news, mixed day, mixed markets. MarketMRIPro@gmail.com or hgsidoc@gmail.com are the best way to get a hold of me. I will respond to anything that comes through the YouTube remarks as long as it's constructive, good or bad. And Google Groups is called Top Down Trader. As always, it's for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools in multiple platforms, but I'm an independent trader and I use all the different tools and the different platforms that I support. We're getting close. Orange County meeting June 6th through 8th, residents Inn and Suites, Tustin, Orange County, California. It's a great meeting. I've got a fantastic lineup of guests joining me. John Person, Dan Fitzpatrick, Chris White, Matt Caruso. They'll all be zooming in. I'll be live. Greg Mills at gam72054@aol.com. He's the contact person. I think today's the last day for the quote cheap hotel rates that were negotiated. And they are inexpensive. This is really designed to be a low budget meeting, $400 for 3 days. My Google group is called Top Down Trader, and it's free. It's not for solicitation, but I post comments there. I post invites there. I post these videos some nights when I don't feel like putting them up on YouTube. And so if you want to keep up to date and want to interact with me, that's a great place. Yeah, I should probably join this generation and go with Discord. I tried that before, and as long as I'm still working full time, it's hard to manage a Discord site appropriately. So right now, this is my replacement for a mailing list. I don't want a mailing list. I'm tired of getting things back saying spam, so I let Google take care of it for me. There were some earnings after hours on Thursday, and there were some big movers. Globant is down 26%. DOX is down 23.6%. Applied Materials down a little bit, 5.6%, Kava down 4.3%, and Take-Two down 3% on earnings. RKT is up 5.4% on news. So before the open on Friday, we've got some earnings. None of these are stocks that I really even follow too closely. But if you own one, it's a big deal. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your earnings date is scheduled. And down here, we got some import prices. We've got some housing starts, building permits. And I think the consumer sentiment is going to be interesting. This will be the initial reading for May. And if it comes in a surprise to the downside, it'll probably pull the market back. And the question is, with the 6% plus move we see in the S&P in May thus far, which is a pretty big move, will that increase the sentiment because of so many people that are holding stocks and they're look at their portfolios? We shall see. All right. My tool that I use is called Market MRI Pro. It is a tool that was developed for me by one of my followers. We've released a few copies in the marketplace, and we'll do the official launch at the June meeting. In fact, anybody who attends the June meeting, not only will they have an opportunity for a extra discount, but we're going to give you a 3-week trial starting a week before the meeting so you can use it during the meeting and for the 2 weeks after the meeting and see what you think. Anybody that does buy it, I also give, excuse me, um, a 3-day test it out, you can still return it policy, which nobody does that with software like this, except we can turn off your access in 2 seconds. So if we look at the mixed day, we saw the diamonds were up 0.68, Russell was up 0.65, Spiders up 0.49, Qs were up 0.11, Bitcoin was down a bit, the dollar was down, volatility was down. If you look at where we closed in the closing ranges, you could see that we actually closed at the upper part of the range, and clearly it was improvement as we went into the afternoon. And except for something like United Healthcare, the markets started to recover some off some initial weakness. And as you can see here, they finished up pretty strong. Um, the Qs were the one that was not up at its highs. It was in the middle, as was Bitcoin. Dollar in the middle as well. And volatility was up, which was up early as much as 1.96%, finished at the bottom of their range. New high, new lows, still plenty of new highs greater than new lows at the 12-month, which is the one that's most important on the NYSE, but still negative on the NASDAQ. If we look at S&P 500 sectors, what led? Healthcare, industrials, materials, financials. That's a little bit of a rotation. Healthcare has clearly been a laggard, and if you look at over 200 days, it is the weakest of the, there you go. You know what? I didn't turn it up all the way. Let me restate that. Rotation into the defensive plays, utility staples, real estate, then healthcare, industrial, materials. Different than the last several days when we saw tech and communications and discretionary, which were at the bottom. What I was pointing out about healthcare is it's been a huge laggard. Over 5 days, it's leading to the downside, down 2.74%. Over 20 days, it's the only sector down 4.28. And over 50 days, it's the only one down double digits, 12.84. So a risk-off picture. Looking at the markets here with the defensive plays up top. What led? Cannabis. So, cannabis has these big moves, and then you look over 50 days, it's still down 8.79%. Aerospace and defense, and I found a couple of things that I like there to the long side. Gold miners, telecommunications, video games, silver miners. Here's your biotech, retail, biotech, Southeast Asia, and solar was up again. So it was a sort of a reversion day. If we look at the things that were down the most, China, fintech, China, lithium batteries, blockchain, oil, exploration, e-commerce, social media, copper, EVs. These are things that had been leading up until recently, and they were laggards in the market on Thursday. The most important thing to me is this third line here, S&P 1500, NASDAQ, and NYSE, and it tells me that on the day, a mixed market, 65% of the stocks were up in the S&P 1500, 53% in the NASDAQ, 60% in the NYSE. Again, much better than it was early. And if you look at performance at the sector level and the industry group, you can see compared to the white or gray of yesterday, it was improved across the board. The buckets, yeah, we're still, I would say, shifted to the right, which means a bullish formation. But the gray above the green says we've shifted to the left a little bit, or we've come off an overbought area. We've dropped from 33%, I think, on the Russell 2000, now down to 5. That's good. That's what happens when you see some sideways-like motion for a few days. You burn off some of that exuberance. So no signals here, but definitely a bullish looking pattern. The market breadth, you could see on the day, the NYSE was up, but the overall, for first in like 5 or 6 days, the NASDAQ was down. This is the NASDAQ composite, which may look different than the Qs. If you look on the day down here, volume was lower than the day before on both. You can see in green stocks above the 20, white stocks above the 50, red stocks above the 200. more at a high range than at a low range, although the one that had the big thrust over the 20 has leveled off some. So this is a reversion to the mean and perhaps getting a little bit exuberant. Down here, again on the left, NYSE, on the right, NASDAQ composites. You could see new high, new lows are positive on the NYSE, but not on the NASDAQ. The AD lines are positive on both, as is up-down volume. And the only new signal down here is this one here, which is another bingo, which is another exuberance to the upside day. You see bingos, which are these green, when it's exuberance to the downside, and you see the bangos with the exuberance to the upside. And I just want to give kudos and a call out to Praveen. I said on the 7th that we probably had hit a bottom, and that talked about that the other day. That was the title of my YouTube video that day. And Praveen actually on the 9th, his signal, the defib, which is a rarely seen bottom signal, actually fired. So it was pretty much spot on. All right, if we go and we look at the timing model, crossing our fingers, we got one more day left this week. And the diamonds, now if we look down here, excuse me, the diamonds caught up. So the spider weekly turned to buy, but it doesn't count until the market closes tomorrow, Friday. The Qs have a long signal. The diamonds do. And if we can move above the WMA, then we'll flip the signal on the Russell. That is significantly better than it's been. And as I talked about yesterday, it doesn't count until Friday at 4:15 when I know they're all updated. But right now I've been saying we've been in a retracement in a downtrend. We're about to flip, I think, the weekly to an uptrend. And that's a much more bullish feeling market. Doesn't mean we're there. Doesn't mean we're not going to sell off on Friday. But to me, it means I commit more cash to the market. And I mentioned yesterday I took some profits. I had some, sometimes I'm a pig on my call spreads or my broken wing butterflies, and I want that last dollar, that last 10 cents on a trade. And I've been burned a few times. And with Powell speaking today and the PPI, I decided to take some off on Wednesday. Took a little bit more off on Thursday because they're going to expire on Friday. And I have now got a little war chest that I built from closing a couple of profitable trades that I'll be itching to get back in and may enter if it's a strong day on Friday. The dailies have been in a uptrend. It takes a second to run the data, but you're going to see the dailies when you look at the buy-sell signal has been green for days, going back to April 23rd, 24th is when those signals happen, and it's been a good signal. So retracements in a downtrend until the market closes on Friday, and then I may have to revise what I'm calling this to a further bullish tone. I look at the indexes, and you could see the spiders broke above the 200. Their momentum seems to be slowing down a little bit. You look at the session we had, and it was up 0.5%. The Qs, a nice candle, closed in the middle of the candle, up 0.11. Again, a positive day. It's a bullish engulfing pattern on another up day. I'm not sure if it's as meaningful, but it's a positive candle. It opened lower, closed higher. If we look at the diamonds finally took out their 200 and were up 0.68. The Russell, interestingly, and I could probably take this line and extend it further, but the Russell is up against a resistance line. And the Russell is the one that has been the weakest and the one I'd be most worried about right now. But that said, it's come off its V bottom quite impressively as well. With the markets, although mixed, mixed positive. The big NASDAQ was down, so it's still mixed. You can see the VIX came down again, and another 4.5% off of a small number and getting to where it was before the recent market changes. And the dollar, after a tease of moving up, I didn't want to do that. Let's go reset that to get to, I just want to move it over some. Oh, so sensitive. But you can see the dollar here um, was down just a little bit on the session. You can see the close was up here on Wednesday and the close is down here on Thursday. So the dollar weakened and has failed at the 50, which is certainly not a surprise. Weaker dollar, you know what gold is going to do. Gold has pulled back to the 50 and pretty much bounced. It was up 1.6. Silver has to get above the 50, but it was up 1.23. Oil failed on the initial run up here. There, if the economy is picking up, and maybe the mixed news today in the States um, question that, but if the economy is picking up, then consumption goes up, and I think that drove this run. Failed at the 50s, coming back down at least to test the 17, and natural gas failed the 50, and it's coming back towards the 200. And as I mentioned before, rates were down. The 10-year was down 1.6, and the 30-year was down 0.99. Interestingly, TNX, we're still getting it from our data feed, but it came off of some of my data feeds. So that's been what I've been looking at for the 10-year interest rates. So that's my view on the market. We talked about how there was a rotation into the risk-off stuff today. You saw Bitcoin come down a little bit. Communications came down. And I wouldn't make a big deal yet. We saw technology have a little weakness. And what we saw was the defensive play. Staples turned up a bit. Industrials remained strong. Utilities turned up. Tech kind of turned down, but not really. Healthcare turned up. Real estate turned up. So not much happened. Materials turned up. So the things that were beaten up the most turned up a bit. And it's not as if we sold off hard on tech and discretionary. That may have just been a one-day profit-taking event. Now the JAS layout is the layout where I do my analysis and look at stocks from a top-down perspective. And we're going to go quick here because top-down wise we could see we start with my impulse list, which is the NASDAQ, NYSE, and Amex added together, filtered for $1 and 100,000 shares. We have almost 3,500 stocks. Each one is assigned to a sector and an industry group. And I could look at, from a top down, I could start with the sectors. Maybe we'll look at some healthcare. Or I could look at industry groups. So the leading sector by percent move of all my stocks was healthcare. If I click in that, these are the 658 healthcare stocks in my list. If I put these by performance, these are the industry groups. Let's just take the top 5. And we'll go 7. Capture those. That gives me 417. The first thing I'm going to do is filter out stocks less than $5 or 500,000 shares. And I'm left with 174. Let's just rank them by the number of up dots, and let's just see if anything looks good. Kinley, MD. I don't like this pattern, this big move up and pullback. Was there news? Nothing that made sense about Kinley. And from an earnings perspective, I don't have earnings on it. I don't know if this is an IPO or what. I just don't like this big gap up and reversal, even though it was up on Thursday. Fulcrum Therapeutics. To be honest, I know nothing about this, even though I'm in healthcare. However, this got a nice little uptrend, even though healthcare has been weak. Its EMS is green. It has CPR, a volume breakout, momentum, relative strength, and OBV look good. Again, I don't know this company from Adam, but it looks interesting. Eton, I love the pattern, don't know the company. Uptrend, pullback, and a breakout. The biotechs and healthcare have been under pressure because of potential for reform in the U.S. So this is ETON. If I look up here, I can see if there's any fundamentals. They're all over the place. Does it make money? It's got a little bit of revenue. Small market cap, 528 million. Yeah, I don't know anything about it, but I'm mostly a technical guy, and I like uptrends, pullbacks, and breakouts. Probably would have been a better buyback here. Right now, it's getting, but is not too extended. CON, yeah, UHS. This is the problem with the group that has been oversold. I don't know Ardent Health Partners, but I mean, you had a really, really bad pullback breaking out here. This is the 200 forming, so this must be another IPO. So I would go through. This is one here that I like, and I talked about yesterday. I said, or the day before, I said these guys have a secondary, and they don't usually announce the secondary and the pricing until after the secondary or the day the secondary is coming out. So if that secondary is out and we've moved up, this is an oncology company with a new drug. That's an exciting thing to me. Um, Whoops, hold on a second. I hit the magic button by mistake and I opened up TradingView, which is just fine. Let's go back into, I wonder what was going on. I like this. There's an uptrend. It's a cheap biotech stock. What I wanted to hit was this one and see that the market cap. So here's a stock with a new approved oncology drug, cancer drug, which will probably be priced at $15,000 to $30,000 a month because that's what they price them. Um, with a market cap of only 400 million, it seems to me to be underpriced. Just my thought. Um, and again, that is if the secondary came out. All right, so nothing has really blown our socks off here. Another way it would have been to take all the industry groups and just look at the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And let's just look at 2-day momentum. Foot Locker is a takeout. Um, Dick's Sporting Goods. Come on, Foot Locker. There we go. You could see this move up here. I'd say it's priced in. NetEase is a beautiful breakout here. Pull back and a breakout. Not a cheap stock. By numbers, it's extended. It was consolidating enough. I would still look at it. And you can see growth rates, surprises, not a surprise on revenue. So NetEase is one that I would put into my list to watch. Boot Barn, a breakout. I'm not sure how much of this was on earnings versus sympathy with Foot Locker. Earnings were the 14th, so it probably was earnings. Interestingly, they had negative surprises, but I guess people liked what they saw. I think it falls in the not as bad as people thought it would be. Here's that KDLY. Here is McKesson, and I think this has given us an interesting opportunity. I've talked about McKesson many times, like Amerisource, now called Cencora, and Cardinal. Here is a monthly chart. All right. I mean, you could even argue there was a cup, maybe a handle, and a breakout here. But ever since 2020, the stock has been blasting. And these are somewhat recession proof. Now, I will tell you where these stocks will get in trouble is if the government actually passes any significant and holds up in the courts drug payment reform. They really are a high revenue company with a low margin. And if the drugs get cut in price significantly, that'll hurt. But, you know, they talk about that every year. I think McKesson's giving you a good buy point there. AWK, water utility. And so again, this is on holdings. All the shoe guys were up. Did they beat their earnings? Earnings were the 13th. They missed earnings, and they're still moving up. Their revenue was strong. Lululemon. Cencora, another one of these distributors. Again, are they giving us an opportunity to buy? Take-Two Interactive. We know games have been strong. This happened because they said a game was delayed, but boy, it's run right back up. There's some good stocks out here. Coca-Cola, not usually what I buy, but it does pay a dividend, 3%. Roblox, this is one that I don't understand because I don't play it, but this one's breaking out here and looks interesting, extremely interesting. Let's put it on a weekly. So it's nowhere close to where it used to be, but it's at base for a long time. This one looks interesting here as well. And just to show you Cardinal, the last of the drug distributors, this one hardly even gave any pullback, but these are steady eddies that perform well almost regardless of the economy. So that's top down at its finest. First, I looked at the top sector and looked at their top 5 industry groups. Then I looked at the top 10 industry groups. Let's go to the impulse, and let me just do a couple of quick ones. I like 2-day momentum as one of my favorite signals. And do I have any? All right, so okay, we have 2. CTLP, Cantaloupe. Um, a lot of funny name companies. I don't even know what this guy does. Um, Cantaloupe is pullback. Looks like it's moving. I'm not interested in this one. And PRCT, Procept Biorobotics. I wonder if they're an intuitive surgical competitor. Um, it's interesting. I don't see the 2 dots, so that is interesting that that's firing. I have to talk to Praveen. These, did I hit the wrong signal? Let's see. Nope. All right. So those don't seem to be too hot. Let's kill those. And let's finish up with one more analysis, which is price greater than 5, volume greater than 500,000. Oh, I got 2 more things to show you. Pullbacks in an uptrend. And we have a lot. Let's rank them by up dots. Let's see. Steris. This one is breaking out. Another healthcare stock. There's not ease. What's con? Concentra IPO. All right, one of the ones I liked was Chubb. And why did I like Chubb? Uptrend, pullback, and that's kind of a nice looking candle to me. Not extended, I believe. Let's go to the daily. That'll look better. All right. My mistake. All right. Here's why I liked it. It's a wedge pop off the daily. Good volume, CPR signal, volume breakout momentum, about to flip on the relative strength. Good on the OBV. I like wedge pops. Just want to show you something real quickly because I messed up and I didn't see any 2-day dots. And I was going to call Praveen and say, why do I have those listed there? And I'm going to show you what my problem was. I was on weekly charts. The signal's on daily. So here's PRCT. And we better see 2 blue dots in a row when it finds that symbol and charts it for us. And there's your 2 dots in a row. So one of the stocks that I liked for the weekend, for today rather, it's not the weekend yet, Jeffrey, was Chubb. And let me show you 2 others that I like while I'm sitting here. So again, now I've ranked the stocks by the number of my bullish impulses. So one of them that I like is LH3 Harris, and I think I like this more than the other one. Defensive stocks, I mean military defense, were up, and you could see this thing has been basing, bouncing off, and not closing above that 200 since it first broke here in December of 24, and we had a decisive close above. We had 2 breakout days in a row. Relative strength is crossing up. OBV looks good. It's not extended. And if I look up here, earnings came out in April, so we have until July 24th. I'm not sure if there was any news here. FAA Newark, Barclays franchise. No. So this one, I like this breakout here, breakout from a base. And the other one that looked interesting is Guidant, but I about to do the same thing. I believe it is just below. Let's see if we can figure this out. 278.8 is the 200, and the close is 278.51. So a move above the 200, and I've got a similar issue as LHX. And then I think there was one more. Let me look at my list that I wanted to show you before I say goodbye. Sorry this thing goes so long. And we'll just look at CWEN, Clearway Energy, and again, another wedge pop. Not as much volume as I'd like to see. It did have momentum, relative strength crossing as is OBV. So those are the things that I'm looking at going into Friday. Not sure I'm going to be holding a lot over this weekend. I think there's still a lot of risk, but I think we're going higher. Why do I say there's risk? 6% move so far in May. Um, at some point we are going to pause, but maybe it'll be like yesterday's title, we just consolidate. See ya over the weekend and have a great Friday.